Welcome to the Leveraging Complexity with Continuous Accounting webinar, brought to you by CorporateLeaders in partnership with BlackLine. My name is Jesper Lillelund. I'm a partner and co-founder of CorporateLeaders, and I will be your host today. The need to turn complexity into a competitive advantage is now more urgent than ever in today's finance function. So improving access to and reporting of real-time data, embedding automation and control, transforming quote-unquote Excel jockeys into analysts, increasing data accuracy, and reducing the likelihood of human error are all critical in today's modern and complex world. We are thus delighted to have Josh May from BlackLine on this webinar, who is an expert on the subject of modern finance. Josh is a highly experienced senior solutions consultant and product manager with over 21 years of accounting experience with strong financial reporting, cash flow budgeting, and analytical skills. Josh is going to share with us how we can leverage the complexity in today's world with continuous accounting, particularly looking at the 5 key steps to continuous accounting, the critical benefits of it in driving strategic transformation, what are top performers doing differently, and he's also going to share with us some insights on the work with Coca-Cola. If you have any questions during the webinar, please do ask through the side panel on your screen. Just select the question pane and type in your questions, and we will try to get to them during the Q&A session at the end. So with that, I would like to hand over to you, Josh.
Thank you very much indeed. Thank you for that introduction. Good afternoon. My name is Josh May. I'm a qualified accountant with over 21 years worth of experience working in the reporting function, focusing on the period, quarter and year-end close, as well as budgeting and forecasting. So it was about 3 years ago that I changed tact entirely and actually moved into the worlds of solution consulting, actually spending more time on the financial transformation piece, really investigating what people are doing for their reporting function and making sure that it's as automated as possible. So really what I'm looking at on a day-to-day basis is how we can bring automation into the record to report space. Once the actual ERP system, whether that's SAP, Oracle, Sage, Sun, etc., has finished gathering the data, how is that usefully turned into information to support the creation of financial statements and to provide visibility for the key stakeholders in the business in their quest to truly understand what are the financial factors that are impacting the entities in which they're in charge of. So really what I'd like to do today is talk about how things are done at the moment and then maybe suggest a vision of how we suggest things can be done in the future by bringing in levels of automation previously unseen, which is simply not possible using tools that were invented in the 1980s, such as Excel and really other solutions which are very simple, very easy to use, we all know and love, but really are very much 20th century solutions, which we can now update with a more robust, automated solution and be able to roll this out in a very simple fashion. The way that new technology works is it enables people who are doing the day-to-day job to benefit from the technology available in the market and being able to roll this out without requiring a degree in IT engineering. So without further ado, what I'd like to do is start by looking at the current way of operating and analysing where there are shortfalls and problems in that process. And I believe a lot of this is going to be very common to you, very understandable, as certainly from my past life as an accountant, I would see this month on month, that simply the same problems were occurring and really we can offer a solution to address these problems. So this is typically what we see as accountants on a periodic basis, where we're looking to close off our period end in a more effective, more beneficial manner. We do tend to start the period end and close on working day one and spend far too much time in the preparation of the figures, which are going to be the basis for our financial statements. We're often accused as accountants of spending 80% of the time simply gathering the data, which we're then going to use for reporting purposes, leaving only 20% of the time left to actually analyze it. That's a worst case scenario, I agree. However, I think this is something that will resonate with many accountants. We don't really use the skills which we've trained so hard for and the experience that we've gathered over the years to best effect. What we want to do is to use automation to free up our time to actually be able to deliver those skills more effectively and to really free us up to become partners within the business, to feed back the numbers to the heads of departments around the company and actually get their input into the system far more effectively. So in the data flow, you can see it's a very linear approach. We're starting our account reconciliations on day one and highlighting where there are accounts which are in line with expectations, and more importantly, where there are items that still need to be addressed. Where there are entries still that need to be made, then journal entries are prepared. Often this will then mean that account reconciliations needs to be redone. And it's all wrapping up into an effective period end close, whether that's within your 7-day calendar or not. We speak to clients who are actually managing to close off in 3 working days or earlier than that. But often it's really what you're including within that period end close which is crucial. The more reconciliations that you can perform inside that period end close, the better, because obviously unless you're analyzing your balance sheet before you close it, how do you really know what transactions have been posted in there? We strongly believe at BlackLine that if you have a clean balance sheet, that often leads to a much cleaner P&L and obviously to a cleaner set of financial statements. So without analyzing the balance sheets through the reconciliation process, it's often unclear as to exactly what items reside in there. It's difficult to spot where there are transactions that need to be amended, where fraud has happened. It's a very large, risky area. And certainly if we refer back to the financial crisis back in 2008, a big driver of those problems was all around the balance sheet and those items which remained in there. Not having the visibility into that process to see those transactions in as near as real time as is possible does lead to issues of items overstaying their welcome in those accounts. Where items are misposted, it can lead to misreporting. And of course, that does generally mean, especially if you are a large institution which is publicly listed, this can lead to immense problems when those items are corrected somewhere down the road. So we believe at BlackLine that actually the account reconciliation process and the journal entries should be happening well inside that period end close. So when you do close off the figures, whether that's on day 7, whether that's earlier, whether that's later, you've analyzed your balance sheets, you know all of the items are being treated as they should do. If then you've closed off your books, the analysis process can then begin. We can start analyzing the financial statements. And again, often this is done using Excel spreadsheets purely because it's so difficult to do this using traditional ERP systems. The visibility is simply not there. Having to shift between so many screens and it not being in a particularly usable format means that the analysis piece from day 7 through to day 14 is actually hampered as opposed to supported. The analysis piece will lead on to early drafts of reporting, but really if that can be done in a more effective way and in fact be done throughout the month end, then we can highlight where there are further issues that need to be addressed. All of these areas will be very much supporting the compliance and control area within the financial reporting function. Again, traditionally, this is something that is very much an afterthought to the period end close and often won't happen until working day 14 or thereabouts, depending on really how much you're including in the earlier stages of the process. By this stage, you should really be focusing on the upcoming period end, not actually analysing and ensuring compliance and control around the prior period end. And that's really the basis for what we would like to suggest for a view of the future, which is where I'll be going next. So really, what does this look like when we're talking about the workflows? Well, if I was to plot on a chart all of the different steps in the period end close and when the activity happens, you'll notice that really in between the period ends, there's very little happening. I know in reality, it doesn't mean that accountants are going home on time and they're not sitting around surfing the internet and kicking their heels. There are plenty of other activities to keep us busy and happy during those periods. It's really only at the period end that the work volumes start to ramp up. This is somewhat reflecting when the business happens, but you will notice that there is a certain consistency to when the actual underlying production from the company itself is happening. This is unaffected by the period, and really it's only the reporting function that has this fixation with the calendar period end. What we suggest at BlackLine is actually looking to really spread this work out to ensure that the work happens far more effectively throughout the period and squashing down this camel's hump. What we like to do is to actually marry this up with when the reporting and analysis within the finance department actually happens. And we can see that this is, again, something that tends to happen as soon as the period end has closed off. This is something that will often then go on throughout the period, and in fact, will often go through all the way until the work ramps up again for the next period end. However, during that period end close, accountants are often just far too busy to give any consideration to including the reporting and analysis piece as part of their period end close. What I'd like to look at now is how we can actually allocate the work out more effectively, and using automation built in the BlackLine tool is to be able to deliver a more consistent approach to the period end close, freeing up time from the usual reconciliation drudgery along with the journal entries to actually spend more time analysing the figures, and therefore being able to smooth that camel's hump out and spend more time on the analysis piece. What is continuous accounting? Well, as I mentioned before, it's actually bringing in automation and control, analysing and allocating out more effectively all of the tasks at the period end and beyond, breaking these down into day-to-day manageable bite-sized chunks. This can be performed on a daily, every other day, weekly, fortnightly basis. We want to get to a position where you know all of the postings in your balance sheet accounts before you've even started your period end close. Nirvana from our perspective would be if you can reconcile 30 out of 31 days in your average month before you've even started your period end close. That means that on working day one, you have 1 day's worth of reconciliation work left to do. That really won't take you much time compared with the beforehand approach. You can then include that easily within the period end close off your figures, knowing hand on heart that your balance sheet is clean, and as I mentioned before, that will lead to a cleaner P&L and a cleaner set of financial statements. The analysis of the work will happen continuously throughout the period, allowing you to actually mirror when the steps are taken, when all of the tasks are completed and the reconciliation is fulfilled. That can then mirror when the actual business is doing all of the work which is making up your numbers. So what is this actually going to look like? Well, we saw before a very linear approach where we started on working day one and we worked through to working day 7, actually preparing the figures. In BlackLine, what we want to do is actually bring in our underlying sources of data on a far more frequent basis, looking for us to be able to bring this information in using a number of clever tools to import them into BlackLine. We will be bringing this in using tools such as web services, connectors, bringing it in via secure FTP transfer straight into the BlackLine product. Because BlackLine is a cloud-based tool, we can be far more open and include and receive many more sources of data into this clever tool than has ever been possible before, certainly much more than on-premise solutions. This means we can bring in information as often as we need it, whether that's on a weekly, a daily, an hourly, a minutely basis. We can bring in that information and use it to drive all of the processes that you see on the screen in front of us. So these processes will happen time and time again, and by applying automated rules and business logic already set up and held within the BlackLine product to all of the information that's brought into the system, we can analyze this information far more effectively and efficiently than has ever been possible before. Typically, when we're bringing information into the system, this is a completely hands-off process. What we want to rely on here are the accountants to use their skills to analyze any variances and to identify where there are trends in the system. We can use analysis and reporting within the BlackLine tool. The output of that process will be analysed by the relevant people with the required skill sets within the finance department, allowing them to use those skills and actually add a lot more to the accounting process than simply putting together the numbers. I, for one, didn't qualify as an accountant to spend my life simply preparing balance sheet reconciliations. I want to spend considerably more time on the analysis side rather than actually spending time creating balance sheet reconciliations, entering journal entries into the system, researching what exceptions are. I'm the one who actually wants to spend the time using my skills to totally drive that process forwards and to make sure that all the figures look correct before they're submitted. So using BlackLine, we can apply templates that are already built, set up within the BlackLine system. And this is going to provide not only a very high quality approach to all of the business processes, which we're going to be running within the BlackLine tool, but also ensure that it's consistent from all of the areas around the business, certainly within the finance department. So we'll be able to know where all of the relevant information is included, ensure completeness of all of the data entry that's brought in. By using a consistent approach to this, it's going to improve the cleanliness of the data, highlight where there are issues, and therefore reduce the amount of time spent on actually making journal entry corrections. I, for one, believe that actually when we do need to make a correction, it can take up to 5 times as long to do that process rather than getting it right first time every time. So built into the BlackLine system is a workflow process. Work can be allocated out fairly to users around the reporting team. This does give management the benefit of insight into all of the workflow, allowing them to highlight where there are bottlenecks in the process, but to ensure that the work is allocated out in an equitable manner, making sure that the users of the BlackLine product are matched most effectively with all the tasks in hand. So from a user perspective, it's going to make sure that my work volumes drop off and the quality of the work that I'm delivering is increased. We're trying to reduce the amount of time, the amount of days when we have to work until the sun has gone down, and actually focus much more on freeing up time of the accountants to not only have a better work-life balance, but to use those skills, which is going to improve their quality of life and ensure that actually they're much happier accountants. From a management perspective, we can ensure work flows smoothly, that work is allocated around the reporting team more effectively, and cover periods of time when accountants aren't able to make it into the office for whatever reason. And when they decide to leave the business at any stage, then work can be allocated to other BlackLine users. And when new members of staff start in the department, then work can be allocated to them along with all of the relevant procedures and procedure notes and training at the touch of a button. So what are all of these different steps that we're going to be performing in between importing the data into the system in the first place and preparing it for initially our soft and then some way down the road our hard close? I'll run through a few of these, but please do jump in with any questions you've got along the way, and I'm more than happy to spend time at the end of this presentation or outside of that explaining in more detail exactly what all of these different procedures mean and actually the impact that's going to have on your reporting department. So I'll start at the top, start at 12 o'clock here with the simplest one in the suite. BlackLine is a very broad product suite. We started out with account reconciliations some 15 years ago. What BlackLine will do is it will import the balance from the underlying general ledger system, automatically set up your account reconciliation for the relevant period, and update it with the latest balance. This does mean that you're not spending time actually preparing the basic structure of the reconciliation. You can get on with the job in hand, which is analyzing the underlying balance and the transactions that go through the accounts in the period under review. The workflow will be built in, so the reconciliation will be assigned initially to a preparer. Where required, it can then go through a workflow approval process to an approver, to a reviewer, and up to 5 levels of review should it be needed. This is, again, a rules-driven process, so it's going to make sure that the workflow allocation brings in the right number of people at every step in the way. Not too few, but not too many people. The reconciliation process is very robust indeed. It allows you to analyze the underlying information. And where you do have high volumes of transactions going through, we can marry that with the transaction analysis product. This will analyze up to 1 million transactions a minute, which are imported into the BlackLine system. It can analyze those items that do have a corresponding entry against which they match, where it has a close match, where there are significant differences, but there are also similarities. And also it can highlight where there are items that are missing. Where these items are missing, these can be reported directly on the face of the account reconciliation, can be allocated to journal entry to make the required journal entry into the underlying system, and this can all be captured on the face of the account rec itself. So already we can see how a number of these different products are working together with a common goal in mind, which is preparing the figures for our soft close. We can also reconcile our accounts at the consolidated level, reconciling between the underlying general ledger and our consolidation system, highlighting where there are consolidation adjustments required, and again, by using our journal entry product, prepare those consolidation adjustments, so as soon as the relevant period opens, the journal entry will flow straight into the underlying general ledger system. So a very effective way of managing all of these items with the required supporting documentation and commentary needed to explain and justify those consolidation adjustments. We can also schedule all jobs within the BlackLine tool, allowing you to sit back and actually automate entirely the process of running the underlying jobs in the system itself, whether that's within the ERP system or within BlackLine. It'll highlight to you exactly what those jobs are, who needs to perform them, and when they need to be delivered. Using the transaction matching product within the tool itself, what BlackLine will do is allocate the workouts to the most appropriate individual within the reporting team, highlighting when it needs to be completed. Alerts and reminders can be set up in advance of that due date, can be set to be delivered at the due date, and delinquent alerts can be sent to the user to remind them of any overdue items. This is very good for the period end items, but also good for daily, weekly, monthly, quarterly, and annual tasks, as well as areas such as budgeting, forecasting, and to upload your provided by client list directly from the auditors. As you can see, we've got a number of tools in the suite. More than happy to go through these at length outside of this meeting. I think most of these are fairly self-explanatory, but there is a tool within the BlackLine product suite that covers all areas. Where we want to get to is actually to analyze the variances that have been highlighted on the back of our reconciliation, journal, matching, and consolidation investigations. The variance analysis product within BlackLine allows you to analyze the entire trial balance from top to bottom, not just the balance sheet, but also our P&L. You can decide what level of threshold you want to bring in to make the analysis piece more relevant directly for you. Do we want to have a different threshold in place for the balance sheet as opposed to our P&L? Do we want to analyze this looking at the account level detail, our cost center, our product code? You can decide. BlackLine can be configured to deliver at whatever level you need it. Analysis can be highlighted using the account reconciliation where adjustments need to be made. This can be configured to run directly into the underlying journal entry product. So the variance analysis will look at the movement of the figures period on period, as well as actual versus budget or actual versus forecast or rolling forecast. So a very robust tool to support the analysis process, the sort of analysis that's typically handled at the moment using Excel spreadsheets. BlackLine sets up this analysis program and only shows you the figures that are relevant for you. So by applying all of these processes time and time again throughout the period, we are in essence performing a soft close as often as you want to run this process throughout the course of the month. It's a very good way for preparing your figures in advance of that hard close. So within the BlackLine suite, as I mentioned, we will import the data as frequently as you need it. We will run this process time and time again and actually schedule that to happen automatically. There's no human input required here. It's really only when it comes to providing explanations that there is a need for accountants to step in and do that. What are the ways in which we typically look to move towards continuous accounting by using the BlackLine product? The first recommended step is to actually split all of the processes which are typically performed on a monthly basis into considerably smaller tasks. Whether this is doing this on a daily, as I mentioned, daily, every other day, weekly, fortnightly, is allow these batches to be split up into considerably smaller chunks, bite-sized chunks, to make it more manageable and make it a much more realistic prospect to be able to repeat time and time again throughout the period. By being able to do this, we can then deliver analysis of the figures as and when the business is happening. For instance, if there was fraud on my bank account, I'd like to be able to analyze that and identify that considerably earlier than simply at the period end, when potentially that fraud could be in excess of 30 days old. Whoever actually made that fraud in the first place could have taken the money out and could be long gone by that stage. With the BlackLine tool and with my proposed approach to this process, it does enable you to analyze this and potentially highlight this the following day. What we need to do is to schedule as early as we can all of the tasks towards the period end close as early as possible within the month. Move all items away from the period end close. The period end close is busy enough as it is. What we want to do is to allocate all of the work out for that lull, typically between the period end close. If these tasks are much more manageable, are smaller bite-sized tasks, then actually this is going to be eminently possible. We can move it into the quieter period, freeing up our time at the period end for the analysis of the numbers which are being reported. What we want to do is to embed these tasks directly into an everyday workflow, and what this will really do is enable us to benefit from the automation within the system itself. This is going to make sure that where there are items that can't be automated, we're never looking to deliver 100% automation, because we do want to use the skills and the knowledge that the accountants bring to the table for the enhanced analysis. Where we can't provide automation within the BlackLine suite, what we want to do is provide standardization. So there will always be journal entry adjustments that are required within the R2R space. Where that's the case, standardize this approach by using templates, by actually making sure that all of the steps that are required to make those adjustments are easily repeatable, standardized, and provide clarity, explanations, and supporting documentation to the people who get involved in the workflow process. All of the areas within BlackLine can be monitored directly. We can give great insight to the key stakeholders in the business, whether that's the owners, whether that's auditors, whether that's management, team leaders, etc. We can monitor the steps in the process, providing metrics and highlighting where work can be more effectively performed, and where scarce resources such as accountants in the reporting department can be more effectively allocated to deliver a more appropriate timetable for your period end close. We can actually deliver this in real time as well. So this is really where we want to get to. This is what good looks like from the BlackLine perspective. Whereas before we had a substantial camel's hump around the period end, around our month end close, you'll notice how that's been substantially squashed down. We've spread the work out throughout the period, and actually we can see how it's much more effectively reflecting when the business happens around the period end close. In addition to that, we can also see that there is a much broader blue band here. In other words, we've got much more time at our disposal now to spend on the reporting and analysis piece. This continues unabated throughout the period end close. We're not pausing that during our busy period end. What we want to do is to make sure it continues. This ultimately is still a working day, even though it is the period end close. Often you'll hear accountants say, I can't work on this, it's the period end. We want that phrase to be made redundant, to actually allow accountants to work as if it was any other day. In truth, we're never going to be able to entirely get rid of the period end hump there, because extra billing will always be received from external parties who are not using BlackLine. But what we want to do is squash it down as much as we possibly can. You know, bearing in mind, we want to be realistic about this. We simply want to make the period end close far more manageable than it ever has been before. We actually aim to deliver this in reality? Well, the BlackLine tool, as I mentioned, is a cloud-based tool, and this really does allow us to turn on and turn off products within the BlackLine suite far more easily and effectively. All of the blue boxes, if I can get my teeth in, across the middle here are actually different products within the BlackLine suite, and we can turn on or turn off these products to meet our customer requirements. As it's a cloud-based tool, it's not really about implementing the product, it's more configuring our SaaS-based solution. Within 24 hours of signing up with BlackLine, you'll have access to your BlackLine instance. Then it's just a case of configuring the workflows within the BlackLine product suite. This can be easily done by clients, but is probably best served in conjunction with BlackLine employees. We have very effective implementation teams ready and willing to go, who can either remotely or on premise come and configure the system to work best for you. I actually implemented the BlackLine tool in my previous company, and it was with great effect. It helped us halve the period end close and include all of the reconciliations within that process, giving us great insight into those reconciliations, handling the process far more automatically and effectively, allocating the work out, and BlackLine will actually do a lot of the work for you. One of the key tools within the BlackLine Armory is a rules-driven process which will analyze your account reconciliations, which are performed on a periodic basis. where those balances fall under one of the automation rules within the BlackLine product suite, BlackLine will automatically prepare, approve, and review the reconciliation for you with no human inputs being required. Typically, anywhere between 40 and 60% of automation is deliverable within the account reconciliation. So that's already a very good return on your investment. It frees up time previously spent preparing the reconciliation, printing it out, getting it signed off, and filing it away, ultimately for it to be destroyed some way down the road. 40 to 60% is a very good starting point for this particular process, and we typically find within the first 1 to 2 quarters that the percentage rate will rise anywhere between 60 and 80%. We do have examples where some of our clients have gone on to achieve in excess of 90% automation for their reconciliations, but for other areas as well, such as journal entry. The BlackLine product offers a very strong tool where you can set up your regular reoccurring journals. As soon as the new period is opened, your journal is ready to go, ready for you to review that journal and hit the approve button, at which point it will be automatically sent off to the next stage in the workflow process. Often we can also allow the system to entirely automate that process. So where during the account reconciliation process, BlackLine identifies that there are journal entries required that need to be posted into the underlying ERP system, then BlackLine will create a suggested journal. This journal again can be reviewed by preparers, approvers, and if required, reviewers as well, and can then be pushed through the approval workflow system. Often we see levels of anywhere up to 80% for the automation of the journal entries as well. So again, a very good return on investment for that particular area. You can decide which of these products you want to turn on and which ones are going to meet your immediate pain points in the first instance. Maybe then in a second wave, you might want to bring on more products into the BlackLine suite. So in essence, what it's doing is it's allowing you to bring on the products as and when the need arises, to actually have your own personal roadmap for bringing in the BlackLine products into the suite. What we do at BlackLine is typically we will recommend a number of products in the suite to meet those pain points. If you agree, you can decide how these are going to be wrapped up into financial solutions to best meet your need. It's very much like a mobile phone or a satellite TV package. You decide which are the products that you want to buy. We can wrap these up into an effective solution, and this just means the cost of buying a solution as opposed to individual products is often considerably cheaper than buying the individual products you may need. So it's just a clever way of rolling these up into a different solution. All of the different products in the BlackLine suite will offer enterprise class security. We have military grade security that will cover all of the products in the suite, whether you're actually wanting to go with individual products, whether you're wanting to wrap these up into a number of solutions, all of it will always be covered by our top levels of security. For those of you who understand security certificates, of which I must confess to not being one of them, we do have ISO 27001. I don't even know what that means, if I'm honest, but I do know that that is the top level of security, and we're the only vendor in this space who actually is accredited with that top level of security. We also audited on a very frequent basis, and on the www.blackline.com website, you have access to all of our security certificates and can see the audit reports where we throw open our doors, and you're able to see how well the system is running and actually what BlackLine is all about. So I encourage you to go and visit that website. All of the different products in the suite are covered also not just by security but also by reporting. You can get real-time analysis into progress throughout your record to report space, whether that's using the real-time reporting dashboards where you're able to get a snapshot into progress throughout your period end close, or whether that's actually using a more traditional reporting suite. These can be set up, can be scheduled to run, and be configured to meet your specific reporting requirements. It's a very good way to get analysis into the reporting function. The data, as I mentioned, is held in the cloud in our own specific private cloud, which is based within the Netherlands with a redundant backup server within the UK. This means that it is very effectively segregated entirely from the rest of the net. It's a private cloud which is actually managed on BlackLine private servers and is run and covered by all of the security while the data is being transferred into the system and while it's being held within the BlackLine tool. So it doesn't matter which of the different products within the BlackLine, all covered by the security, all held in the private clouds, whether that's account reconciliations, supported by the transaction matching product, allowing you to make journal entries into your underlying ERP system directly from the BlackLine product. Using transaction matching to deal with the large volumes of transactions, which are typically seen in day-to-day business, effectively allocating these items at 1 million transactions a minute and reporting that back directly on the face of the account reconciliation product. This is all wrapping up the data to support the variance analysis product, allowing you to get real insight into where are we in the period end close, what are the strange looking movements within my financial statements, as I mentioned, across the entire trial balance, and actually all managing the information towards my soft and ultimately my hard close through the consolidation process, supporting the wrapping up of the figures in aggregate towards your consolidation system. This can be done on a more frequent basis. I've spoken so far about account reconciliations at the period end. Using the daily reconciliation process, we can break the reconciliations down into more frequent reconciliation processes, whether that is on a daily basis, every other day, once a week, every other week, etc. The daily reconciliation process allows the analysis of the figures within the balance sheet on a far more frequent basis. Finally, what I'd like to briefly touch on here is actually the Insights product, which is allowing real-time insight into your period end close and how well you're performing against all the other 2,500 companies that use BlackLine around the world. I'll give you an example of a couple of those companies in a minute, but with such a unique database of KPIs to draw on, BlackLine has a product that shows you in real time how well you're performing against the best performers in the industry, allowing you to highlight whether you can improve your automation percentage, whether you can close off the books earlier, etc., etc. It's real-time insight into that particular process. So however you want to wrap up your solutions, your products, BlackLine has a solution that will allow you to deliver on that. So beyond that, we can offer solutions for the intercompany process across all of the companies within the group. And specifically for SAP users, we have an automation tool that actually allows you to get very high percentages of automation by running transaction codes directly within your SAP instance. So I mentioned how we are ERP agnostic. We have a number of very high profile clients around the world. eBay, Google, Coca-Cola, Shell, etc. are all long-term clients of BlackLine and all use a number of different ERP systems. Irrespective of what data source you want to bring into BlackLine, it's just a simple flat file transfer in a readable source that's required to feed into BlackLine to be used to support the record to report process. So we've seen what the benefits are. It's actually reflecting a more modern way of operating, ensuring that the data is delivered in a more real-time approach. It's consistent, it's repeatable, it's in a good quality, and of course it's templated. So it's actually allowing you to really spend more time focusing on the underlying problems in the data that you may be experiencing and leveraging the power of the cloud. So you can access the BlackLine tool irrespective of where you're geographically located around the world or via the BlackLine app. So here are a few statistics to show you typically what top performers using BlackLine actually achieve. On average, we find it knocks up to 4 days off your period end close. It brings anything up to 90% greater automation around your period end close, and often this will lead to a great reduction in your audit fees. Obviously, this is going to allow the audit to happen considerably earlier in the audit process than has ever been possible before. It'll allow auditors to access the tool remotely, so they don't have to come into the office as often. And of course, they get better insight into your financial statements through the BlackLine tool, and therefore audit queries drop substantially. It makes a very good case for pushing hard for a reduction in the audit fee. In general, costs within the finance department on average drop by around 52%, as overtime drops substantially, full-time employees can be allocated to other areas within the reporting department or indeed around the business as a whole. And actually, we can see that that generally does lead to a reduction potentially of around 60% plus in the number of people required to support the R2R process. Of course, that's based on the figure that actually you're using the labor more effectively rather than for producing the figures to actually analyzing them. So we've got a number of high-profile use cases where we can see that even top companies can be improved upon. I never expected that actually we would be able to reduce the number of days to close that a company is effective and efficient as eBay takes to close. But by using the BlackLine tool, we managed to reduce their period end cycle by 70%. I'll be talking very briefly in a second about the manual effort required for Coca-Cola to close off their books and what benefits BlackLine actually brought. But we've got thousands of examples of this, and we're happy to share any of those with you. I mentioned Coca-Cola is a long-term BlackLine client. They joined with us back in 2013, 2014, and since that time, they've really rolled out the BlackLine product suite to great effect. We can see that originally, when we started this project, there were in excess of 800 people involved in the reporting department, finishing off the Coca-Cola group accounts. Over the course of 2 years, and by rolling out a number of products within the BlackLine suite, we managed to reduce that from 800 down to 300. And since that time, it has in fact reduced further. Mr. Eamon Matthews, the lead for the accounting and reporting process within Coca-Cola, who has actually often spoke at the BlackLine conference as well. He's a big fan of the BlackLine product and is a real visionary in terms of opening up his mind to automation and how this can really support accountants and get the most benefit out of the expensive accounting resource. BlackLine started this process with Coca-Cola in 2013. They rolled out the BlackLine tool in 2014. And really what it's managed for them, what it's managed to do for them has actually allowed visibility to be at the heart of the project, allowing them to really analyze the figures in real time as the business happens. Problems from a user perspective, this has enabled users to go in and make corrections and therefore not have to raise their hand and confess that errors have indeed been made. It's real-time analysis of the figures with the correct explanations and follow-up procedures in place as and when the figures are being completed. This really does allow them to take a regional approach to reporting and still allow central analysis from headquarters into the progress made throughout the period end close. This, as mentioned before, has led to a very big reduction in the number of people directly involved in the preparation of reconciliations, journals, completing tasks as part of the period end close, but it has freed them up to actually be doing more value-adding information in terms of explaining what any variances are and to support the reporting process. As mentioned, from the global level, from headquarters in Atlanta, they're able to get real-time transparency into progress throughout the period end, as well as what's driving the underlying numbers. Thank you very much for joining the webinar. I'll throw open the floor to any questions you may have. Should you wish to contact BlackLine directly, please do so through the BlackLine website or by contacting me at josh.may@blackline.com. I'm always happy to answer any questions, to arrange to actually jump in and demonstrate the product suite to you directly. And of course, you can actually download these slides yourself directly. So please don't hesitate to get in contact. But in the meantime, I'd like to throw open the floor to any questions you may have.
Great, thanks, Josh. Yeah, so we've had a few questions, but if anybody has any, please do so through the question pane on the right of your screen. We have one question which came in, which was about what kind of companies can benefit the most from continuous accounting or from the services that you're providing. Josh?
Apologize, it works a lot better if I take you off mute.
Yeah.
So, my bad. User error. As we say at BlackLine, picnic. Problem in chair, not in computer. As you can see on the screen here, we do have a very diverse spread of clients within BlackLine using a number of different ERP systems. What we can deliver is a solution that will meet your specific requirements, irrespective of whichever industry you're operating in. All different types of companies will have a finance department, and we simply offer a solution that can match all of their requirements. This is a tool that does tend to work very, very well where there are large volumes of transactions going through, where there are a number of different tasks, where there are high volumes of reconciliations that need to be produced. That's where you're going to get the maximum benefit. But we cover all different sizes of entities in all different types of industries, from 2 users of BlackLine per company up to 10,000 and everything in between. It's a very flexible tool that can really deliver on your requirements. Certainly, we operate in 130 different countries around the world in every type of industry. So a very flexible approach to this.
Yeah.
Very good question.
Okay, I have one more. We don't have much time left, but I'll just take a couple more. So one was, how long does it take to implement your services?
It really depends on how many products you're looking to bring in from BlackLine and how many underlying ERP systems you have. Typically, the actual with the BlackLine product is incredibly simple, but as per all of the products, which I hope you can still see on my screen in front of you, it depends which of these products you want to bring in. If I was to look at a typical implementation example of an account reconciliation, reporting and transaction and task management implementation, this would be anything between 6 to 12 weeks from the date you sign on the dotted line with BlackLine to the day you close off your first period end using the product. It really depends how much time you can share with us. We have a very big BlackLine implementation team who can get going as soon as you're ready to go. We can throw as much resource at it as towards the project even as you need, and we can meet your timetables. Typically, we look to work around your busiest periods, such as period ends, audit visits, holidays, etc. But that aside, we can focus on it and really look to deliver it in 6 to 12 weeks. Where there is a more complicated data flow, maybe where we're using the BlackLine's journal entry product and marrying that with transaction matching, then typically that will take slightly in excess of 3 months. But again, depends how many journals you want to create, how many underlying ERP systems you're using, and the complexity of the transaction matching process. So hopefully that gives you a good idea. Do get in contact with me with more specifics around any projects you're thinking of, and I can certainly deliver a more tailored answer.
Okay, great. I'll take one more question and then we'll close. The other one was, I think you touched about this on this earlier in your presentation, but what kind of ERP systems can you connect to?
Yes, absolutely. We are totally ERP agnostic. It really doesn't matter from our perspective which ERP systems you are. And in fact, still bring in all experienced companies where they might have an instance of SAP, but alongside that, they may be running an instance of Oracle, of SAP. They might be holding certain figures purely in Excel. What we look to do in BlackLine is to take a feed of data from any underlying ERP system you may have. We've worked with over 65 different types of ERP systems since BlackLine was launched. And our record to date is to bring in, for one company, we brought in 126 different types of ERPs and different instances of ERPs into one single look and feel to show the customer exactly what it all should look like. This was an eye-opening experience and did actually highlight that how they were doing it before, cobbling together Excel spreadsheets, hadn't worked as effectively as they thought, and simply they weren't reporting the right numbers. So actually, that's the approach we take, a simple, single approach to bringing in all the data and actually automating that to be entirely hands-off. Very good question, thank you.
Well, very, very, very impressive. With that, we come to the end of the webinar. I want to thank everyone who's taken part, and particularly you, Josh, for some really valuable insights. As Josh mentioned, if you want more information about BlackLine, you can reach out to him or visit the blackline.com website. Thank you very much for attending and have a good afternoon.
Thank you very much. Bye-bye.